Good morning, everybody. Welcome to the Flow Show NFP Day. Big old day, double bubble with Canadian jobs as well. So, plenty to get our teeth stuck into today. Are you ready, Kay?
That rhymes. There, you're right. We got a Friday. Yeah. We're ready, right? We're always ready. Yeah, for when the market goes a bit ballistic.
Yep, absolutely. But there's being ready and there's being more ready. So today I'm more ready than usual ready, but we're always ready. Right, everyone ready? Good. Let's get
Maybe
stuck into it.
maybe it's the last day of the month where we have to be ready.
Yeah, we always have to be ready. Last day of the year. It'll
Here,
be
yeah,
this
yeah.
time. So lots of fun, no doubt. Right, Japanese wages. That was data that came out overnight, and altogether pretty good. I might have some different numbers than what you guys are seeing there, so I'll read out what I've got. Let's see if it matches up. So overall pay or overall income was up at 2.6% as expected, up a pip. Household spending year on year was down 1.3%, but not as much as expected. Spending on the month of October, though, was up a healthy 2.9%. That was a very good number there. Cash earnings, and this is one of the numbers, came in at 2.9%. That was unchanged over last month. Full-time pay came in at 2.8%. That was unchanged over last month. Both were expected to rise a point. Probably the more important number that they don't bother putting on the calendar is real cash earnings. That was expected to come in at minus 0.1% from prior minus 0.4%, but it came in flat. So not good news that it came in flat, but better news that it wasn't another negative. So overall, the numbers are keeping the economy where it wants to be in terms of Shiba and wages, and also the Bank of Japan as well. Obviously, they'd like the real pay to be higher, but we're still running decent numbers in the rest of the earnings data. So, green light, more of a green light for the BOJ, Kate?
Um, does it change much, Ryan? Is the question. I would not say so. It's the spending is good, huh? The well, and on the year on year is still negative, but the spending month on month is pretty decent. Wages continue. Don't change a winning team, I'd say.
Yeah, yeah. I don't think I'm not saying it ramps
Oh,
up the probability, but it
yeah.
falls into the if the data
Mm,
follows our outlook, and I think
mm.
that sort of numbers are following that outlook.
Yeah, absolutely. And also, I mean, it's been inverse to other central banks. It doesn't warrant an outsized hike, but it just keeps them on the path, right?
Yeah, yeah. I think that's the main thing. Someone wants them to get a move on, though, the BOJ to get a move on, and that's the opposition party leader of the CDPJ, Noda. He says the BOJ should normalise monetary policy and stop persisting on achieving its inflation target. Obviously, opposition leaders can say what they want. Doesn't really hold much sway over there. But given that there's still a bit of political turmoil over there, these comments are being reflected around the establishment. Over at the RBA, there's been a poll by Reuters, and all those polled say the RBA are going to hold rates steady at their December meeting, which is next week. And they've pushed the timing of the first cut into Q2 now. Financial markets, probabilities, whatnot. Company pricing, just over a 70% chance of a cut in April. So we'll have to see what happens with those. But the RBA next week expected to stay on hold. That won't be a shock. Like a lot of central bank meetings in December, it's not so much what they do now, it's what they indicate for the new year, because that's what everyone is looking forward to trading and getting positioned for. Not now, but then. K, S&B FX reserves rose in November. Was that them tinkering around as usual?
Oh, I don't think so. If you look at how dollar Swiss moved and on average, Euro Swiss didn't move. Um, it's always a tough call where they're because I mean I should have gone and look where their reval is. I'm not sure they even put it on, but no, it's kind of logic. Dollar Swiss is about 1.5% higher. If you look at the reserves, about 1% up. So yep, I think sort of. Maybe minor, but I'm not going to bet on the fact that they were in at all.
Yeah. And just because the FX reserves move doesn't mean it's down to intervention.
Revalues,
They have other bits and pieces to do as well, rebalancing
revaluations
and
from one
payments.
month
And
to another.
yeah, exactly. Bank of England Green says services inflation remained stubbornly high, underpinned by wage growth. She says the decline in wage growth is not as fast as I wanted, saying inflation is fundamentally more persistent. We could see weak consumption in the UK for a while. And an interesting comment, the UK may have to choose between the US and the EU in terms of what its relationships are going to be. Overall, slightly undovish comments about inflation and wages. Doesn't suggest she's in a rush to look for another rate cut, though what they say now and what they do at the meeting can be two different things. But overall, not, as I say, rushing towards a rate cut, it seems. We had a bit of data out this morning in the Eurozone, not a lot, a bit of trade balance data, industrial production from Germany coming in soggy as normal, par for the course, was expected to rise to 1% or rise 1% on the month, came in down 1% instead, no shock there. We got the final Eurozone GDP numbers there, no shocks there, coming in all as expected and prior numbers and whatnot. 0.4% growth for Q3, quarter on quarter, 0.9 year on year. We've got a bit of confliction going on with ECB calls at the moment. Traders have pulled back how many cuts they see coming in 2025. It's now less than 150 basis points. But then a Bloomberg poll of some economists show that they say the ECB is going to cut faster in a bid to revive the flagging economy. They say respondents predict a 25 pip cut next week, and then at every policy meeting through to June, which will take the deposit rate down to 2% in June. That's earlier by around 6 months, because previously they saw the ECB hitting 2% by the end of next year, towards the end of next year. So you've got some traders cutting ECB cuts through 2025, and then you've got others, economists and whatever, predicting that they're going to go faster. I actually will side with the economists on this one because that's my feeling as well. What do you think, Kay? You forget next week. What are they going to do into 2025? Fast or slow?
I think there's a risk for sorry, if Trump would start to hammer Europe, then there's a risk for them to do a 50. If not, I tend to agree. Every meeting 25s, and let's get it down to neutral.
Yeah, no, I agree. I think, yeah, I think they're going under 2% personally. That's my
Well,
thing for next year.
it is possible, Ryan. It's very possible that they go under 2%, but it's somewhere. And I'm a little surprised Lagarde is not more dovish than what she is right now, because I thought that once we'd start to go, yeah, they can always talk about we were too late on the one hand, so we don't want to be too early on the other side of the street. But yeah, she does surprise me a little about her undovish stances that she keeps on holding, that she keeps. So yeah, to me it does feel that she it would take a lot for her to vote for a 50 perhaps right now. Or things can change, but I'm just a tad surprised about her stance.
Yeah, no, I agree with that as well, mate. Sorry, I'm just trying to look at something on the back end as well. Right, moving on. Who's next? Well, we've got a bit of data out from the US yesterday on the jobs front. Challenger layoffs came out. Another pretty chunky number, 57.7 thousand. Last month was 55.5 thousand, just under 55.6 thousand. So another fairly chunky number, as I say. The majority of the cuts went in the auto and tech industries because of pressures going on there. Obviously, we know there's bum fights going on in the auto sector, EVs and the like, but it's looking like that's being reflected in the US as well. So that number overall, it's not, as I said yesterday on posting the data, it's a heavy number. We have seen bigger. It's not a huge red flag for the Fed just yet, but it will keep their eyeballs on these various jobs numbers just to make sure that it's not picking up and getting to levels that are going to be problematic. So for me, that sort of number would keep 25 well on the table. Initial jobless claims with another big fat meh. Came in at 224, so still in that range that we're seeing. Continued claims coming down to the 1.8 millions again, had been sitting up for the last couple of weeks in the 1.9s. That could have been a reflection of the weather pass through and whatnot. People having to claim for a bit longer before they can go back to work, but overall, we're back where we were, and there's no problems from that number. Trade balance improved for the US, or the deficit improved, shall we say, coming in at minus 73.8 from a prior minus 83.8. So better there. What else? OPEC, they're going to kick the can. It's confirmed they're going to kick the can on their output hike until April, and then they hope to unwind that from April through to September 2026. So they're going to go a bit BOJ on it and take it slow and steady. Of course, we've spent most of 2024 kicking the can on this output hike. They've decided to throw in the towel on trying to guess it every month or every meeting, and now it's been kicked to April. We shall see what happens in April. Mexican President Sheinbaum hopes to reach an agreement with Trump to send deported migrants back to countries of origin. So that's conforming to one of Trump's threats, tariff threats, that they pull their finger out and start acting on that as well. So again, another indication of how countries are going to react when Mr. Trump waves the tariff stick at them. What do you make of that, Kay? Does that ease things for the Mexican peso? But we've still got bigger bum fights to come.
Well, in theory it would, but good luck doing it. Huh? I mean, how? I mean, you see the stream of migrants going through Mexico. I don't see how she's going to be able to to do what? Hire taxis and drive them all back home. Is such a big undertaking, and I don't see how she will really be able to do it in reality. You know. Just a promise, and we will see next year if she can make any promise hard, you know.
Yeah, I mean, I don't think Trump cares how she does it as long as they're not going through from Mexico
Perhaps,
to the
yeah,
US.
yeah. It's maybe that which is going to be more important is to stop the flow into the US. What happens with those people afterwards is not his problem, right?
Yeah, exactly. But yeah, she's jumping around trying to please Mr. Trump, and that's all he's after. Right, hang on. We've just got Dingra on the wires. BOE's
You got
Dingra,
negative
big
interest
dove.
rates.
Yeah, nothing from her of note at the moment. Just looking at the headlines. Yeah, keep an eye on that. Well, we know what she's likely to say anyway, being the biggest dove on the board. So it ain't going to be hawkish, I can tell you that. That's it from the news front. Anything from UK to finish off the Friday?
No. I think you covered everything, Ryan. That's good. Good enough.
Good stuff. Thank you very much. Right, well, let's have a look at the NFP and Canadian jobs data to come. Expectations are ranging around the 200k mark, anywhere 200, 220, that sort of number. So this is the expected. This is the expected bounce back from that weather-related, strike-related 12k last month. So we know which way the market is looking. It's looking for positive number, a good rebound, which obviously puts the bigger price risk if we see a smaller rebound, or maybe even something shocking like a negative number. That will really put the cat among the pigeons. Obviously, we do have scope to see a bigger number than that if that effect from last month really comes back. So if we get a big one, maybe a 300k, 250, 280, something like that, it will be a good number, but the market might probably shrug that off just as a bit of a bounce back number. So, it might not look as bullish as the number suggests. The unemployment rate is expected to tick up a pip, but those expectations are split between various calendars and sources. Some others have that stand at 4.1%. As usual, you need to keep an eye on the participation rate because that can have an effect on that unemployment rate. Participation rate, no expectations on that, but I'm just going to have a quick look around, and the participation rate is expected to tick up to 62.7 from 62.6. So that might be why we see the unemployment rate jump in there. So just remember, if the participation rate goes up, it can increase the unemployment rate and vice versa. Okay, so if you see the unemployment rate coming down and the participation rate going up, that's a proper positive number. So as always, we take the headline number for what it is, take the unemployment rate, counter it off against what the participation rate is doing, and then you get your overview. On the wages front, wages, average hourly earnings year on year expected to tick down to 3.9% from 4%. That's that number there. It's been running around 4% for pretty much most of the year. So unless we see a big variation, that will probably slide under the radar. But if it stays up at 4%, it does hint at or continue to show stickiness in wages. Down at the Canada data, we're expecting 25k on the employment number. For Canada, same thing applies here for the unemployment rate and the participation rate. Unemployment rate expected to tick up to 6.6%. Then also keep an eye on the usual revolving door as to whether the growth or losses are in full-time or part-time. It's more bullish if we get strong job numbers and it's in full-time rather than in part-time, because that makes it more of a shorter-term gain. Kate, we know what you're expecting from the NFP 111. What's the market likely to do depending on which way it goes?
Okay. So we're expecting a decent number, as you already mentioned, and that's perhaps a bit of a risk there. And I would say, specifically since we are December, a bad one may have perhaps that little bigger impact. That's what I would say. Also, exactly with year end in mind. If everything comes in as expected, I don't know what the market is going to do, to be fair. I'm leaning, but I've hedged some of my dollars and I've already been trading it around my shorts. I'm leaning towards the bigger move being for a weaker dollar if that is warranted. And being December on the unemployment rate, it could be that 0.1 makes a difference today, and that's what I'm rather thinking. It could be that usually when you say, "All right, let's fade it," because that's what was happening before during the year, and not being just a week ahead of central bank and not being December, I would say, yeah, fade something. But here, I think looking at the time of year as well, it could be that just minor misses or a beat could have a bit of a bigger impact. So the main thing today, I think that for people who have positions before is keep them small enough and keep your stops wide enough not to be hammered both sides of the market. That would be a possibility, and then only the real market starting in the third wave, for instance. But that is something that I'm looking at. But also, yeah, as I said, the small differences can have a big impact today. As for the Canadian, um, yeah, we will have to see what they come up with. I, Trudeau is trying also to negotiate a bit with Trump already. Um, I think the market may it may shrug off a Canadian number unless it's a big variation. I think for the Canada, it's going to need a bigger variation than perhaps for the US to really get things going. Don't know what you think about that Canadian thing.
Yeah, no, I'm in the same boat. That obviously the US data will trump what comes out of Canada, particularly in dollar CAD. But it can also mean if they both go the same way, like a strong NFP and a weak Canadian data, that's going to be dollar
Yeah.
CAD running higher.
Mm,
Um, for me, price wise, I think it's quite simply 141 or 140, and what side
mm,
of that we move on these numbers. I, it's a difficult one. If you're talking from the Canadian side, I'm more inclined to buy a dip on good Canadian data
mm,
than I am to sell a rally on bad data.
mm.
But then you bring the techs into it. If you hold 141s or the high 140s, maybe that's a trade to look at as a bit of a counter. Um, and if we get a break of 140, we've got a lot of traffic down below to lean on, particularly around 139 and a half down here. So yeah, I think there's enough both sides. I don't know. I think I'm catching. I must have been listening to you lot too much and Blake and whatever, because I'm getting a little bit bearish on the dollar as well. Just looking at what's going on in prices. So maybe selling dollar rallies over good numbers today might be the way forward. I'm thinking about that for euro dollar as well.
Mm.
It's it's at that point where a break of 106 looks more likely than not. The market looks like it wants to have a good go at that. So I'm still short up here, but if we get a good strong number from the US, I might flip that around, get out my short, and maybe flip it to a long and see what happens after.
The big question is as well for the euro dollar is, and we will know after the number, but assuming that euro dollar walks through that 106, is it going to hold? And the question there is, as the market covered enough of its short euros in going into the numbers, because we've seen, okay, euro sterling has been stable, but still, it's not coming down anymore. But then you look at the euro Canada, euro yen, euro antipodians, they're all higher. And quite a bit higher on the week. So I think the market was running quite a bit short euros. So that raises the question, if you go up in the euro dollar, has the euro got enough strength to go? Sorry, it's still not my instrument of choice, because that euro, I don't see too much in the fundamentals, but it's going to be the dollar side of things today. So yes, I think if it breaks, it's probably going to trigger takes. And a good point raised as well, when we go into big data. It's always good to have a look at what options are pricing. And today, we are pricing a bit wider on the option front on the at-the-money straddles than we usually do, even over events. So it's a tad wider, but just well, not to give everything away what happens in the chat room, but I would be very careful if the dollar, if euro dollar trades either side of 104.90, 105 or 106.78, because that's where the main option interest would actually come in when you look at how the straddles are priced today.
Yeah, absolutely, mate. And there's the options widget. So if you want to look at option stuff, that's available on our dashboard under the live options pricing tab. So you can get a look at all that sort of stuff there, including the option volatilities, which I take a look at just to give an indication of how things might move when we do get price moves. So you can check that out. If you're an Forex Analytics subscriber, that's on our dashboard. Yeah, I mean, it's one of these things we trade in different time frames. Longer term, I'm bearish the euro, and I'm going to be trying to position that way going into next year or from the start of next year, whatever. But short term, today, next week or so, yeah, I can see that there's every chance that we see a break up back up through 106 and head a bit higher. But again, that might happen today, and then next week we run into the ECB meeting, US CPI. I think half the reason we're seeing a bit of a tick up in the euro, particularly in the crosses as well, is just because we've really washed out any hope of a dovish cut next week from the ECB. There was some people in the market thinking maybe a fifth on the table. That's all pretty much been quashed this week, another week. So the market knows what the ECB are doing next week. There's obviously still a risk that they might have a dovish outlook. We've got the forecast coming, might point to an increased speed of cuts next year. Who knows? That's the risk. But we're in that stage, Kane. It's always like this in December, where we just get one risk hump coming one after the other really quickly. So you can't marry a position today, and because it can be different on Monday.
Yeah, absolutely. Okay, I mean, so far it hasn't really started in all earnest yet, but I'm with you on, and well, I've been saying it. My bias is more for a bit short dollars, selectively short dollars. Let's be clear about that. But yeah, it still has to start, and perhaps today we are going to see that kickstart, especially if the numbers come in a little weaker, because I still think year end has not kicked off fully yet. Yeah, and then for the euro, yeah, you know my view on the euro, right? Medium term, long term, there's absolutely no reason to buy it. So for me this week, I'm luckily I wasn't short euro dollar, but I was short a bit of euro kiwi that exploded in my face. But again, as we often talk about, when you don't have the high convictions, also to keep the position small. So I mean, the cost has been extremely reasonable for what I've tried and looking at the move.
Yeah, exactly. Yeah, I mean, we were all looking at what was going on in around the fix yesterday. We had dollar Swiss tapping that 88 line that's been so solid for the last few weeks. I gave that a go just above the figure. Didn't look good into the fix. I managed to get out of it this morning for an 8 pip loss, which looks to be the good move today, seeing as now we're down testing yesterday's lows. But yeah, there's conviction. It's hard to have a lot of conviction at the moment. Rick's asking about dollar yen. This one looks a bit strange because we're seeing yields tens coming back under that 420 mark, and this is what the fourth time we're seeing this happen. So I would have expected dollar yen to be a bit weaker. So what's that? 1, 2, 3, 4, 5 times it's happened. Now it's not collapsing under this level. So it just might mean we're just setting up a bit of a different level down here. Let me look at the price quickly because that could be reflective. So yeah, this price into 110.06.09. That's where the price is running trouble. But yeah, we're below this 420. Of course, we get the data. It's strong. We could be back above again. But the market seems to be more willing to buy bonds than sell them at the moment. And that should be weaker for dollar yen, but it's not at the moment. We still don't know what to do around this 150 line, whether to get below it or stay above it. As I showed with the volatility a moment ago, the swings are still quite choppy. We're still getting 100 pip, 70, 80 pip moves around this. I think for this one, Rick, you've got to, if you're looking at it over NFP, you've got to look on the wide. I think a run up to 152 couldn't be ruled out on strong data, see what it does there. Conversely, a weaker one, we might get a move down to that lows, maybe even the 50 in this area around 148. So if you're looking to trade this NFP, I would more likely park my buses against the range edges and see what the price wants to do if we get there. Have you got any feeling for this one, Kay, and why we're not following yields today in a big part?
No, I think if you look at the crosses, that's where it happened. Euro yen is recovering, sterling yen is recovering, and even Swiss yen is on the recovery, and those things I think are the more driving. And the market also perhaps a bit short, dollar yen, running into the NFP, managing the books. But yeah, it's 152, 148 now, low 148s for me. For the viability of any move, we need to get outside of those prices. And it's the yen, so per definition, it's going to move very hard.
Yeah, no, I agree with you on that. And right, Ali, you're asking a question on gambling. Okay, I've not got a problem with anyone who wants to trade into the number, but the way you framed it yesterday was like, what did you call it? Let's toss the coin or something. You said along those lines. That's what I was pointing to. You want to trade before the NFP, my friend? Go ahead. You make money before it. Go ahead. The gamble is if you're in a position, a small position, that may be a bit in profit, not in profit, and you want to let it ride over the NFP. That's the gamble. Okay, you don't know what the NFP is going to do, and it's a big enough event with enough volatility that if you're trading with 20 pip stops or whatever, and you're 20, 30 pips away from your stop, there's a good chance you're going to get knocked out of it. So you have to decide what you want to do with that trade. Do you want to let it run over the data or not? But yeah, it's not. I'm not saying you were gambling yesterday. I was saying the way you phrased it sound like it was more of a gamble. So that's what I was getting at yesterday. Right, Kate, I'm going to bang it over to you, sir.
Okie dokie.
Oh, yours.
Cable and the Kiwi, and the cable is already coming. Cable is already here, main king. Okie dokie. Yeah, so two things are possible here. And now it's been doing the rounds. We call it the pattern with no name, this one, the head and shoulder or the inverse head and shoulder. But you know that I've been looking at this actually since the start of the week, so I'm going to claim that one. It is still a potential one in the making, providing that we break through 127.75 after the NFP. Okay, whatever happens before the NFP, to me has absolutely zero value. If we run up to 128, the figure, because there's a stop run ahead of the NFP. I want to see what happens after the NFP, okay? But it's also the top side of the wedge. So that, to me, is making this level very, very interesting. I am still a bit long. I think it's going to go. I'm okay to run it because I've been managing my book. So this is what I was mentioning also in the room, and if you are in a position just an ahead of the number position that you put on today, or just now to try and capitalize on something, be careful, because stops can be done both ways of prices that we see now, or ranges that we are seeing now, because we have seen these very often in the past. And I'm going back actually to what happened October last year. We had a really good NFP, and euro dollar dropped something like, if I recall correctly, 75 or 80 points, and that was the low, not to be seen anymore for the next 3 months. So I guess today we could see kind of similar price action. You can see one move, and then it's completely countered, and we take the other way around, whether it's up or down, But if your stops are too close, the risk is that whether you're long or short doesn't matter. Your stops are going to be taken out today. Okay, so the way I'm doing this is I've managed my book. I'm in a smaller position. I'm long from here, and so I managed it. I bought it back and sold it out again, and so I'm in a on a very, very good average in the cable right now. So I'm even going to look for the wider one myself. But that's because I'm already thinking about year end as well. But if it today it goes and it holds above here, I think we could be off to the races. And I'm not usually in for making big calls because we know how the market has been disappointing to many for many times. But I think if we get a weaker number today, also with the Fed, with the Bank of England, etc., in mind, I think we could be off to the races. Okay, and I don't know where we're going to end up, but I think we could be off to the races. So that for the cable. Well, we've got to look at it, but see what happened here. We went down for a quick one overnight. This is also what's going to happen. You see those moves, then it comes back, and now we're hanging in the middle of that range. Today, I think whether you look at this one, 2607, or this one, 2590, that's going to be the most important levels to the downside on gold. As per updates and stuff, I've already reduced quite a bit as well. So I am in a relatively comfortable position right now with a small long, because that's still my overall view that we are going to at some point resume the top side, but we need to hold 2590 here for me. Now, encouraging would be today that we get above 2665, 63, 65. If we get above there, that would be really encouraging to me, and then it can push higher. Okay, so that's about the view here. Be careful if we break those two levels here, and it's going that would not be looking really good, okay, if we break below 2590 on gold. Silver hanging around, having a beer, watching the game, and now we need to know whether we are going to go 31 and a half, 31.60, 65 if we're going to get through after the numbers, or if we're going for a retest of the box. It's been very strong, this box, okay, so respect it. All right. If ever we are going to test the box again, I would respect it. Don't. Well, it could collapse, of course, if we get down there. But be careful. Don't. I wouldn't go short here, for instance, just hoping that we get down there, because being this box being so strong, it could easily rebound quite bigly afterwards. Okay, yeah, Ali, this is not a good one, right? On the dollar Swiss, we have broken 88, and we are below, and we are holding below. Okay, this is another one where if we get a weak number, it's very possible that this falls out of bed, because this was strong. 1, 2, 3, 4, 5, 6, 7 or 8 attempts to get through, and then finally it goes. This is could mean two things, of course, after the number. If the number is good and we are going back above, we retest it and then move higher. It can be the real bounce, okay? But it looks a bit dangerous, this one, especially if we start to get below 87 and a half, 87.35. This looks weak. Now, is it going to dump? That's another question, of course, for the Swiss, because we've been talking about those reserves this morning. I would not be surprised that if we see like big drops in dollar Swiss or euro Swiss, that the SMB may show up at some point to start smoothen the fall. Now, remember also what happened last year. Okay, last year from about this time of year, dollar Swiss dropped for about 5 big figures. Dollar Swiss actually dropped quite a lot at the end of the year last year, but also from this 7-8 next week, Monday, I would say, of December, we dropped a solid 5 big figures. Okay, is a remake in the making? I don't know. Do I pay attention to it? Yes. I mean, this 2023, end of 2023, really is still very, very fresh in my mind, and I would not rule out to see a bit of a remake of it. So I'm extremely cautious with what I'm doing with the dollar right now. Okay, then we need to talk about those because this is defying the laws of gravity. Euro antipodians, I don't know. I think it's well, hairy hindsight, of course. Market too short euros, need to cover whatever. We are in an interesting area again here, but we have broken out here. So probably, probably the market being too short. I was short too. I gave it up for now at least, but I haven't given up on the idea because I think if the number this afternoon is risk positive, meaning we are not ramping higher in the unemployment rate and we are not printing a number sub or again 12K or even worse on the headline number. I think somewhere around 100K with a stable-ish unemployment rate is going to be risk positive on the tip of my toes. I would think that at one stage euro antipodians will come down again, but has to be said that they have been rocketing since the start of the week, and every morning in Europe it's been beat. That is the other factor that we need to acknowledge. Every morning it's been beat. Now, is it finished? I don't know. But this Euro Aussie, for instance, 164.80, the top right now. 165 and a quarter is a bit of a level to me. Watch what happens for the end of the week. We could be at 166 if it's a risk negative number, for instance, because both Aussie and Kiwi have both been underwhelming this week, and we find it back in the prices. Obviously, that 64.40 is still something that we need to keep an eye on. But then below here, we are talking about 63.75, 63.70 something. People are talking a lot about the 63.5 as well. So keep an eye on what's happening in the Aussie if we get down there. Okay, could see that we see a bit of a fakey print 63.50 and then start to move higher. That'll depend on how the risk profile of the numbers are, and Kiwi as well. Look at it globally. I've already been saying we have to look at longer and then shorter term. It's still not looking good. It's still not looking good. To look better, we need to close above 59 figure 10. Okay, that is a condition sine qua non for this to start moving higher again. Can it happen today? Obviously, it can happen today, but beware if we start to get back down again below 58, it could get a little bit freaky if we go down below 58, because I've got the small impression that I'm not alone in trying to catch these knives again. I've been managing my position as I usually do and keeping it small. My book is not in danger. That's what Ryan and I always talk about. We don't want to hear horror stories about somebody having like completely killed his book on one set of data. Okay, the 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 only thing that is going to keep you trading when you are a starting trader, this is very important to know, always have the luxury and the potential to take the next trade. That means do not kill your book on one trade, okay? And on one set of data. This is really paramount. If you want to continue to trade, do not blow your account up today, all right? Ryan, back over to you, mate.
Thank you very much, mate. Great advice as always. Just before we continue, I'm going to put in the Zoom chat the link again for the NFP competition. If you haven't taken part in that yet, do so. 3 lucky winners will receive prizes ranging from free access to Forex Analytics, coaching sessions, live squawk, Peak Suite, lots of stuff, lots of stuff. Yes, Ali, I've seen your Euro Sterling. I'll talk about that quickly. So yeah, take part in that NFP competition. I won't bother taking the screen, Ali, because you got your own charts. I'm still short, just sub of the 83 figure. I'm happy to stay in shorts and potentially add to that. So yeah, while we're below 83, we're looking good. We need to break that 82.76 properly though for further downside. Stick your lines in, check your charts. You'll know what I'm talking about. Right, folks, do trade safe over the NFP. Thank you, as always, for coming to the Flow Show. Thank you, as always, to Kate for his valuable insights. I hope you had a good week. I hope you have a good rest of your week. Remember, Friday's Pips are Beer Pips. Have a safe and peaceful weekend. Thank you, everybody.